Oil jumps as OPEC Plus weighs biggest output cut since 2020. Oil prices jumped Monday as OPEC Plus considers reducing output by more than 1 million barrels per day to butters prices with what would be its biggest cut since the start of the COVID-19 pandemic. Brent crude futures rebounded $3.26 or 3.8% to $88.40. US West Texas Intermediate crude was 4.2% or $3.33 at $82.82 per barrel. Oil prices have tumbled for four straight months since June as COVID-19 lockdowns in top energy consumer China hurt demand while rising interest rates and a surging US dollar weighed on global financial market. To support prices, the Organization of the Petroleum Exporting Countries and its allies, known collectively as OPEC Plus, is considering an output cut of more than 1 million barrels per day ahead of Wednesday's meeting, OPEC Plus sources told Reuters. If agreed, it will be the group's second consecutive monthly cut after reducing output by 1 lakh barrels per day last month. The backdrop for this week's meeting is precious, but the fundamentals of oil are relatively healthy, said Peter Amcinelli, global lead for energy at investment research firm Third Bridge. The two biggest question marks are the demand outlook and what happens to Russian supply after the EU ban goes into effect on December 5. OPEC Plus missed its production targets by nearly 3 million barrels per day in July, two sources from the producer group said, as sanctions on some members and low investment by others stymied its ability to raise output. While prompt Brent prices could strengthen further in the immediate short terms, concerns over a global recession are likely to limit the upside, consultancy FGE said. If OPEC Plus does decide to cut output in the near term, the resultant increase in OPEC Plus spare capacity will likely put more downward pressure on long-dated prices, it said in a note on Friday. The dollar index fell for a fourth consecutive day on Monday after touching its highest in decades. A cheaper dollar could bolster oil demand and support prices.